Hi guys, good morning, good afternoon, good evening guys. So welcome guys, welcome back to ProForex101. So today in this session guys, we will be looking at candlestick patterns that you can use for trading. There are many candlestick patterns, okay guys. But today this session will spend time on exhaustion patterns, okay. It's one of the most famous reversal patterns in the trading world, okay. So yeah, like there are about 3 or 4 patterns that are really, that are my favorites, that I really like. We won't have time to cover all 3 of them in this session. You'll understand what I mean, like in the sense that there are small subtle differences in the candlestick color and pattern that depending on where the location is, and it gives a different signal. So anyway guys, so let's get into it. So yeah, because of that there's a lot of things that we need to cover just on one candlestick pattern, and you'll know what I mean when we go through this session today, okay guys. So because you might be thinking we're gonna spend 20-30 minutes talking about one candlestick, but there are you'll understand what I mean guys, okay. So all right, so let's try to get into this and analyze what these candlestick patterns are and how to draw them. And so let me bring up my whiteboard guys, okay. So okay guys, exhaustion, okay. And in anything in forex guys, before you do anything you need to be in some kind of a trend, okay. So now we're in a, let's look at a bullish pattern, right? So let's say we are in a downtrend, right? Oh. Okay. Fill in the body, okay, and fill in the body here, right. And I want to put some tails. This is the deviation. Okay guys, so first bullish signal that we're going to be looking at is an exhaustion, okay. So an exhaustion is a candlestick that's formed where the open is lower than the close, and then you got a long tail. So in a candle guys, this the deviation on top is usually known as the wick, and the deviation at the bottom is known as the tail, okay. I think this green is just too bright. 1 second guys, let me get another green. I think it might be better. Yeah, it's better. So okay guys, so this is an exhaustion, and characteristics of an ideal exhaustion, okay guys. The tail on top has to be bigger than the body, okay. The body is from here to here, okay, and the tail at the bottom has to be sorry, what am I saying? Again guys, sorry, it's the wrong way. The tail on top has to be smaller than the body, okay. I'll say tail for all these wicks and tails guys. It's just easier to otherwise it's like wick and tail, it'll confuse us more. So anyway, the tail at the top has to be smaller than the body, candle body, and the tail at the bottom has to be bigger than the candle body, okay. and then as you can see, I drew this whole candle quite big. The size of the whole candle, which is from here to here, has to be bigger than the previous candle. So you just the candlestick on its own has no significance, guys. Okay, it's when you compare it with the previous candle set or candle that you realize, okay, there's a significance of this candlestick. Okay, so it's all relative. So without something to compare, you don't know what the significance of a particular signal is. Okay, only when you compare it with something else that you know, okay, that it has some significance. Okay, so this is perfect exhaustion. Okay, where market every time, like when you're looking at the patterns, guys, just see or try to visualize in your mind what the market is doing. For instance, here market opened here, closed all the way down here. Market gapped up a little bit, opened here, and so let's say this is 1 hour charts. Okay, 1 hour. Okay, so market next hour, market gapped out up a little bit and closed all the way here. Next hour, a little bit gapped up a little bit but closed all the way here with the deviation, and then the next hour we gapped down. Okay, and then we had a deviation, and then we closed. In this deviation, we tried to go so far away from this open, and then we got rejected rudely to a point where the market came even beyond the opening price and closed above the opening price, which is suggesting to us that there's a big signal for a sell, saying that market wants to go long. Okay. Okay, guys, so this is a reversal pattern, and yeah, market wants to go long from here. Okay, right, and now, okay, so now it's gonna get a little complicated, not complicated, bit confusing. Okay, so now another candlestick signal where a big tail comes into play is the same thing, but it's upside down. Okay, so that'll be an open here. Okay, and then a tail to the very long tail to the top, and then market comes back and closes here. Okay, and then you'll have a very small tail at the bottom. Okay, this here is also another bullish signal, guys. Okay, okay, this is also another bullish signal. Why? Because market opened here, it tried to go up all the way up here, it got beaten back, but we closed above the opening price, so which is a sign that, okay, there is buying pressure. So there's so many ways of looking at it, small subtle differences. Okay, and these signals, they would be invalid if they were a different color. So on a downtrend, if these exhaustions were red, it would be invalid. Okay, so let's draw them. So these are that's why I said, like, very small subtle differences. It's like a language, you know. Small subtle differences can mean different things. Same thing in candlestick patterns, guys. Small subtle differences can mean different things. So for this instance, if this was a red candle like this, where we have an exhaustion pattern, but it was red at the bottom of a trend, I'll draw both of them so we don't have to come back. Okay, so guys, in a downtrend, if you get these exhaustions but they are also red, they are invalid. Okay, this is a valid exhaustion. because it's green. So these small subtle color differences, guys, like, you know, they make a difference. Okay, why? Because now look at the price action. Now we market opened here, closed all the way down here. The next candle opened here, we tried to go down, we got rejected all the way back up here, but we never went above the open, which means there is pressure to go down, and also there's pressure going up. So what this will probably do is sideline the market. Okay, we won't reverse it. So when we are on a downtrend, you see these kind of exhaustions that are in a different color. They might sideline the market, not necessarily reverse it. So you don't want to be trading them. Okay, or even the market might continue going down after these. So okay, so it's very important, guys. The location of the candlestick is very important, and the color is very important, and the trend before is very important. Okay, yeah, so I'll just leave it till here. So let's do a sell scenario. Okay, so this is what I meant, guys. Just by looking at an exhaustion, you'll have to spend at least 20-30 minutes trying to figure out what they are, how, you know. So it's not easy, even though it's just this very simple candlestick pattern. And I don't want to, like I always say, guys, it's if you want to do a learning session, maximum 30 minutes. Beyond that, guys, your attention span just goes away. You know, your mind just zones off. I could have done all 3 candlestick patterns on a one session, but it'll just be too much info, guys. Okay, let me color this in. So, you know, when I said that earlier, that small subtle differences make a difference, this is what I mean, guys. Okay, so you have to be very, very careful when you're looking at candlesticks. You can make mistakes. So you got your wicks and tails. Okay, in this scenario now, since we are in an uptrend, to go south we need a red candle. Okay, so we need a big tail and a smaller tail at the bottom and the body. Okay, and also with regards to this, the opposite scenario would be this. Some people call this a hanging man. Doesn't matter what you call it, guys, just get the patterns in your head. You know, that's what we need to do. Because it looks like a man hanging on a branch or something, you know, like it's like body and his legs dangling down. Okay, so these two here, they are reversal patterns, guys. Okay, oh, that's the big. Okay, this is a good signal to go down, go south. Okay, now similarly, if these two candles were green and we were already in an uptrend, they are invalid. Let me draw them again in green, guys. That is because the open and close is in different positions. Okay, guys, and they mean a lot. Fill in the body. Okay, so they would be invalid, guys. Okay, and this is a valid signal. So you see the difference, guys. So there are very small subtle differences in color, and depending on where the candlestick is, and they mean different things. Okay. And there's a term, location in real estate, right, guys? That is, a house in a good location with a good view might be worth twice as much with a compared with a similar house in a bad location, bad neighborhood with a bad view. So same thing, a candlestick with a they'll look the same, but depending on the location, the reversal signal is different. Okay, guys, so let's have a look at some examples on our charts. Okay, and yeah, so try to master these, guys. Okay, I'm just drawing them all in here, but yeah, this is what you need to master. Okay, and here, and also you need to know that prior to these signals that we got, what kind of a trend we were, downtrend or uptrend. Okay, downtrend or uptrend. Okay. Okay, so let's go have a look at these some examples on our charts, guys. Okay. So first things first is a bullish reversal pattern, something like this. Let's look for that one. Very subtle differences, they mean a lot, they mean different, they have different meanings. Sorry, 1 second, I increase my brightness. Let's see. So I'm on the 1 hour chart, guys. The reason being that there will be a lot of swings and then a lot of exhaustions coming up on the 1 hour. Okay. I see a nice example of a failed exhaustion here. If this was green, it would be a nice reversal pattern, since we were already in a downtrend and this popped out, where the body is small, the wick on top is smaller than the body, and you got a very huge tail at the bottom, and it's bigger than the previous candle. This is a very good reversal pattern, but only thing, it's in the wrong place and it's the wrong color. So this, what we're looking at is, let me bring here this thing here. Okay, because we were already in a downtrend and we got a nice exhaustion pattern, but it is in the wrong place, wrong trend. So what happened after that? It's just the market just sidelined and then dropped. Okay, instead of reversing. So anyway, let's look at a reversal. So this is a failed exhaustion. Okay, that's a very good example of it. So let's look at a successful one, guys. This here is not an exhaustion. Why? Because the tail on top is bigger than the body. This is actually a doji. Okay, so very subtle differences, but they mean different things. Okay, there's a exhaustion pattern here. See, we were in a downtrend, right? And then straight after that we got this candle where the body, the wick on top is almost same size as the body, or smaller maybe, or same size, it doesn't matter. Okay, and then the wick, the tail at the bottom is bigger than the body, and this whole candle is bigger than the previous candle, right? Look what happened after that. We moved all the way up here. Okay, so, and this is a very small signal, right? So okay, we got some movement from it. The bigger the candle, the bigger the signal, the better it is. Okay, So let's look for more examples, guys. Okay, I want to find a very nice one. So, and guys, just because I'm showing you this, don't go blindly trade this, okay? In the sense, if you see an exhaustion, don't, because as I said earlier, the location of the candlestick matters, okay? It doesn't, if it's at the wrong place. And also there's a sweet spot that in the market that we look for these exhaustions on. And when we get into a trade at that sweet spot, that's when the market flies. Otherwise, don't just blindly, what I'm trying to say is don't just blindly trade these exhaustions, okay? Oh, here we go. Okay, that's a nice exhaustion, right? So downtrend, red candle, red candle, red candle. This exhaustion popped out where market opened here. Let me zoom in. Okay, market opened here, tried to go down all the way here, got rejected, and then came back rudely and closed above the opening price. And we were already in a downtrend. So what happened? Moved up, and this signal is this one here. Okay, you see this coming down, exhaustion, coming down, exhaustion, and then reversal. That's a reversal pattern. Okay, so yeah, these areas, guys, they might be coming in from a supply and demand or a support resistance, but as I said, yeah, don't blindly trade these exhaustions, okay? So let's look at one more buy example, and then we'll look at some sell examples, okay, guys? The exhaustion patterns are very famous in the Forex field or in any trading field because it sticks out with a big tail. Okay, but yeah. But just know that there's many more candlestick signals. Okay, guys. There's like something called railroad tracks, which is like a bullish engulfing signal, or morning stars, evening star. There's so many patterns. So anyway, we'll go through these two other patterns that I just mentioned later on. But for today, guys, I think just sticking to the exhaustions is enough. Another buy example. Come on, where we know. Like on this pair, guys, it's there's 28 pairs that we can trade, so there's always these signals popping out here and there. So just because I'm finding it hard to like find these signals, doesn't mean they are very rare. They happen all the time. Okay, I'm just on one pair right now. Let me go to random date. Oh, this is a nice exhaustion example for the other type, the upside down one, where we were already in a downtrend and a exhaustion comes up with a big tail on top, and it's a green color candle. Okay, and then what happens? Market goes in, market turns around. And if you go back to my drawing, 1 second, it's this one here. Okay, green, and we're already in a downtrend. Downtrend, green, exhaustion, and then it's an upside down one. Yeah, so you see these subtle differences, guys, with the tails, because if you're looking at the tails and thinking maybe if this tail is on one side, I want to go with the tail, and then sell this. Cannot, because I've seen somebody explaining like looking at this like a rocket. If the tail is on the top, it's a rocket pushing the market down, but in this instant it's not. The tail is on top, it's it's pushing the market up. Small differences. Okay, guys, and they mean a lot. It's like a language, as I said earlier. Because small nuances and small different way of speaking can mean different things in some languages. Same thing for these candlestick patterns, guys. Okay, I think enough buys, guys. My eyes are hurting trying to look for this. So let's look at some sell examples. Okay, so we had for the sell signal, we have to already be on a buy scenario. Okay, and then we're looking for the sell signals. So looking for a sell, so it'll be on the top swings. Okay, there's a nice exhaustion here, right here. See this? We were in an uptrend. Okay, there's two exhaustions, this one and this one. Okay, so anyway, we'll just look at this one. Seems to be more significant. It's bigger than the previous candle, and look at the body compared to the tails. Okay, big tail on top, big wick, and then small tail at the bottom. So this signal is this one right here. We're in an uptrend and we want to sell. In an uptrend we want to sell. So let's look at another one. Okay, exhaustion here, uptrend, nice red candle with a big wick on top and small tail at the bottom. What happened? Reversal. Let's look at one of those the upside down exhaustion, the hanging man example for a sell. Okay, here we are. This is a hanging man example for a sell where it's an exhaustion, but the wick is bigger and the tail on top is almost equal to the same the size of the body. Okay, but this is not a good example because, guys, see, it's not bigger than the previous candle. It's probably almost the same size, so wouldn't have much significance, okay, the way we're looking at it. So yeah, I wouldn't say that's a good example. Okay, guys, of an hanging man. Let me look for more. So yeah, these small subtle differences, they mean something. Okay, okay, this one here, it's an exhaustion, right? And we're in an uptrend and it's red. Look at the tail on top, smaller than the body, and the tail at the bottom bigger than the body, and also this whole candle is bigger than the previous candle. So this is a good example of an exhaustion, and market crashed after that. Okay, So again guys, so depending on the area where the the location where the signal is, so let's try to see if we can find example of where we are already in an uptrend and then we get a green exhaustion, and then if it worked out or not. Okay, so let's see if let's see, find an example of a failed exhaustion. So yeah, again, depending on the location guys, they mean different things. Okay, thought I spotted one. Oh, here you do. Here we go. Right there guys, we were in an uptrend. Okay, and then we get this exhaustion. Why didn't the market turn around from this exhaustion? Because it is green. If it was red, yes, it's a reversal pattern, but now here we are already in an uptrend and it's green. Market just kept going up, had this noise here, news movement here, but market kept going up. So this is where's my chart? This scenario here, we're in an uptrend, we get a green exhaustion, didn't work. Okay, so this is not gonna work in an uptrend, these two. Similarly, if you're in a downtrend, these two, they're not gonna work. So you see guys, small subtle differences how you read the charts makes a big difference. Okay, and again, location just like in real estate. So if the candlestick signal is in a very good location, it'll make you a lot of money, and if it's in a bad location, you won't. Okay, so again, exhaustion for a sell. So okay guys, I think enough examples for today, right? We've gone through all types of scenarios where we looked at successful exhaustions on a downtrend and successful exhaustions on an uptrend. We only looked at one failed exhaustion, but you get the point, right guys? So yeah, so it's basically the opposite scenario, the complete opposite to on a buy scenario is the sell scenario, because on a red exhaustion on a downtrend you wouldn't do anything, but on a uptrend red is good. Okay, and on a buy on an uptrend red is green is bad, and on a downtrend green is good. Think of it like that. That might help you to think remember this easily. Okay, okay guys, so I think that's enough for today. Yeah guys, so thanks for joining in guys, and if you like the video, please do hit the thumbs up button and do share, and yeah, see you in the next session guys. Bye for now.